Hello learners, we are discussing risk management. I hope you have watched my previous videos. The first video was on why one can never lose money in stock markets, a very important video explaining the importance of risk management in trading. The second video was about risk reward ratio, and this video is about position sizing. So we have I like to divide risk management into two parts, that is risk reward ratio, which we discussed in the previous video, and this video is about position sizing. ये वीडियो इंग्लिश में है. अगर आपको हिंदी कंफर्टेबल है तो आप मेरे यूट्यूब चैनल में जाके इसका हिंदी वर्जन भी ढूंढ सकते हो. हर एक वीडियो इंग्लिश एज वेल एज हिंदी में अवेलेबल है. सो वंस अगेन आई एम रिपीटिंग, risk management is one of the important pillars of successful trading. Without the knowledge of risk management, one can never be a profitable, consistent trader. I request you to stay away from all the advisors, trainers who are giving you calls and tips without stop loss. If a person is not giving you stop loss, stay away from that person anytime. If a trade goes wrong, if something comes out and the trade goes miserably wrong, then your loss is not capped. You have an unlimited loss, and this will wipe off your capital. I'm hearing the same stories from so many people who have been cheated, who have lost their wealth in stock markets because of no risk management system. Risk management is one of the top secrets of top traders. This is the reason why 95-96% of the traders are consistently losing and only 2 or 3% are consistently making money from the markets. So this topic is that important. Now let us jump into the topic now. In the previous video we have discussed risk reward ratio. Now we are discussing position sizing. First of all, when you begin trading, you must determine your trading capital. Think of it as the amount which you are investing in a new business. You are entering a new business of stock markets trading. Let us say that you decided to invest 1 lakh. So 1 lakh is your trading capital. Generally, it is proposed that your risk tolerance should be 1%. It means that in a trade, the maximum amount you lose is 1% of your capital. So in a trade, you will lose 1000 multiplied by 1%, that is 1000 rupees. So the maximum loss in each trade cannot be more than 1000. So the loss is already capped. It means that if you have 100 back-to-back failures, 100 back-to-back stop losses, then only your trading capital will be wiped off, which is very rare, which cannot happen. And if we have technical analysis on our side, then it is impossible that you will have 100 back-to-back losses. So we already got very safe here now, right? Now, how do we decide our quantities? Let us take an example. Suppose you identify a trade opportunity where you buy a stock at 100. In our classic trading course, we have understood that our methods are such that when we identify a trade opportunity, the first thing we identify after it is the stop loss. After the entry price, the first thing we identify is the stop loss. So we will identify the stop loss here as 95, let us say. Now, when we have a stop loss, we can determine our loss points. That is 100 minus 95, the maximum loss is 5 rupees. Now we like to keep our risk reward as 1.3. So we can now determine profit points as loss points multiplied by 1.3. So we need to have profit points of 6.5. So target will be buy price plus profit points, that is 106.5. Now this trade will give you a risk reward of 1.3. Now this is what we have covered in the previous video. It was just a quick revision. Now how do we determine quantity? Simple. Quantity is determined by the maximum risk per trade divided by loss points. So in this trade you will take 200 quantities. You will buy this stock in 200 quantities. Let us cross verify. If we buy 200 quantities and if the trade goes wrong, what will be the maximum loss? 200 quantity multiplied by loss points. So the max loss will be 1000. Now it is matching, right, with this maximum risk per trade. What will be the max profit? Quantity multiplied by profit points, that is 1300. If the trade goes wrong, you lose 1000. If the trade goes right, you earn 1300. Now clearly you can see that the risk reward ratio of 1.3 is maintained here also. It is very simple. Let us now take one more example. Now let us take that we have identified opportunity to buy a stock at 1050 we determined a stop loss at 1010. Now we can have a loss, we can determine loss points as 40, that is buy price minus stop loss. Our risk reward is 1.3, so the profit points will be loss points multiplied by risk reward ratio. We want 52 points of profits. So the target will be buy price plus the profit points 1102. Now if we take this trade like this, if we buy this stock at 1050 and immediately place a stop loss at 1010 and target order at 1102, it means that our risk reward ratio is 1.3. It has been maintained. So now what will be the quantity we will trade in this one? The quantity will be maximum risk per trade, that is 1000 divided by loss points. We will take 25 quantities. Let us cross verify. 25 quantities, maximum loss will be 25 quantities multiplied by loss points 1000. Maximum profit will be 25 quantity. If the trade goes right, you will earn 1300. Again, the same thing has been maintained. So in each trade you take, the maximum loss will be 1000 and the maximum profit will be 1300. Whenever you take a trade, at that very moment you set a stop loss. You place the stop loss order and the target order at that very moment. As and when your buy trade entry is triggered, first thing you do is place your stop loss order. The next thing you do is place your target order and forget the trade. Follow this. Do not let your psychology interfere with this system. Now let us take this example of short selling a stock. Let us say that you identified a trade opportunity where you are short selling a stock at 350. You are setting a stop loss at 365. You can identify the loss points easily. 365 minus 350, that is 15 rupees. Risk reward ratio, we keep it as 1.3 constant. Profit points, loss points multiplied by 1.3, the profit points comes to 19.5. So your target will be sell price minus 19.5, 330.5. So if you take this trade, you are selling at 350, keeping a stop loss at 365 and a target of 330.5. It means that you are maintaining a risk reward ratio of 1.3. Now how to determine the quantity to trade? How many quantities we should short? We will calculate it easily. 1000 maximum risk per trade divided by loss points. So we will trade 67 quantity. Let us cross verify. Suppose we trade 67 quantity and the trade goes wrong, the stop loss gets hit. If you look at the loss points, so the maximum loss will be 1005. Maximum profit will be 67 quantity multiplied by profit points. It will be 1300. So this is the system you need to follow in each trade. Please do this before taking every trade. In all the trades you take, you bear maximum loss of 1000 for a gain of maximum 1300. And when the price hits your stop loss or your targets, you immediately exit and not play mind games with yourself, otherwise markets will play with you. It will eat you up badly. Do not do this. Once you set your stop loss and targets, forget the trade. Now if you have a capital of say 5 lakhs, then your maximum risk per trade will be 1% of 5 lakhs, that is 5000. So your quantities will be more. See, the quantities have changed because in each trade you are risking 5000, so the maximum loss is coming to 5000 and the maximum profit is coming to 6500. So the quantities are changing. Let us go back to 1000. So with 1 lakh of capital, the maximum risk is 1000, right? Now you may have a question that once you start trading after 4 or 5 trades, suppose that your capital has turned out to be say 1,05,000 after 10 days. In 10 days you see that your capital is now 1,05,000, you have earned good profits. So question may come up that whether I should revise my calculation, whether now I should revise my maximum risk per trade as 1050, that is 1% of 1,05,000, or whether should I continue with this system, that is 1000. If you revise your trading capital, if you increase your trading capital for calculation purposes to 1,05,000, then for each trade you are risking 1,050 now. So your quantities will change. For example, in this case, instead of 200, now let us see what the quantities come. 1050 divided by loss points. Now it is coming to 210 because your maximum loss is now 1050 and max profit is 1365. So I do not recommend revising your capital after every trade. What you can do is you can check your capital once in every 40 days. It means that when you start off your trading with 1 lakh capital, after 40 days, see what is your capital now. Let us say that after 40 days, your capital is 1,08,000. So after 40 days, start calculating your quantities based on maximum risk as 1080. Then again after 40 days you make the next revision of capital. Do not revise your capital after every trade. It is very foolish to do so. Keep a gap of 40 days, it is recommended. I do it the same way. Every 40 days you check your capital and then decide your maximum risk per trade. Now I want a commitment from my viewers, my learners. You can send me a WhatsApp message or a Telegram message on this number that you promise that your capital is, let us say, 80,000. You write that, sir, my capital is 80,000. In each trade from today, the maximum risk I will take is 1% of 80,000, that is 800 rupees. I will set my risk reward ratio as 1.3 in each trade. I will not change my risk reward ratio. If you do this, my friend, if you commit to this sincerely, without interruption of your psychology, of your stupid psychology, no fear, no hope, no greed, if you follow your risk management system with discipline, believe me, you are in the league, you are in the winners league. But if you ignore this, if you ignore the risk management part, you will be thrown out badly from the markets. So I'll be waiting for your message. I want a confirmation from you. I want a promise. Again, it is your money, it is your call, but I am trying my best to educate about this topic to all the small traders who do not know about this and who keep losing money consistently in the markets. Apart from this, if you have any queries, feedbacks or questions, you can contact me. My contact details are given in the description box below this YouTube video. If you found this video helpful, you can share it among your friends, among the traders groups, trader communities. It will help small traders to protect themselves from big losses. I again hope that you follow this sincerely. Without this, there is no successful trading, believe me. You can subscribe my YouTube channel to get regular updates. Thanks for watching. Goodbye and happy trading.